just now.
Good morning. Good morning. I keep getting weird links for Zoom, so I'm really glad I can get on. How are you? Good morning, LabCoatAgents. How are you, Patrick?
I'm doing well. Yeah, like I said, I got Navy duty this weekend, so I got my first haircut in quite some time. And as you know, I was gone last week because unfortunately our family dog had passed away. But if there's one piece of advice I have for everyone, get pet insurance. Pet insurance for us paid for itself. She went through 2 years of cancer, and our pet insurance, which cost us only like $50 a month, covered over $40,000 in bills.
What?
Yeah, I know. That was a good investment, pet insurance. But when we found out she was diagnosed with cancer 2 years ago, if we didn't have pet insurance, I don't think we would have spent all that money. And the vet said she had about 2 to 3 months to live if we didn't treat her, and 6 to 8 months if we did treat her. So we treated her like chemotherapy, everything they do for humans, they can do for dogs. And she outlived all prognoses, and she lived 2 years. And it ended up costing the pet insurance company a little over $40K. But we used Trupanion, which I highly recommend. I think I mentioned to you guys once before. I'm not like a spokesperson for Trupanion, but they literally saved my dog's life for another 2 years. And for a lot of us out there, dogs are like a part of our family. My wife,
especially for our kids.
What's that?
Especially for our kids.
Yeah,
you know?
We've got a daughter, and like our dog and our daughter grew up together. We got our dog when our daughter was in 5th grade. We got a golden retriever, and now my daughter's a senior in high school. So it's been like we've had 2 kids in the house for the last 8 years, and
yeah.
But yeah, first of all, get human insurance. If you don't have insurance, an agent, you should have insurance. And if you don't think you have access to any, you do. Your state's association of realtors will often give insurance out to realtors. It's not free. You got to pay something for it. But I know in California, CAR has insurance, California Association of Realtors. So make sure you're insured. And then after you're insured, if you can, get your pet insured. It's well worth it.
Absolutely. Yeah. So for those of you that don't know us, I'm Vanessa Noble. I'm an agent out of Anchorage, Alaska. And Patrick Kappel is also an agent in San Diego, sunny San Diego. And so we teach this investment seminar series. We've had Patrick on now, like all through the summer. Him having a master's in an MBA in with an emphasis
MBA
in finance.
with a focus in finance, and then a master's of science in real estate.
Yeah, it's pretty cool. It's pretty cool to invest that much time in your education in these topics, and now that wealth of knowledge, plus all the experience. You've had a team now for 3 years.
Yeah, coming up on 3 years.
So wait a minute, you've been licensed for then 3 years?
Yeah, I got licensed in 2016. I started out in commercial real estate, and then following about 1 year in commercial real estate, I moved into residential with a focus on not just helping home buyers buying single family homes, which I do, but also a strong focus on helping investors investing in 2 to 4 units, which is considered residential real estate.
Yeah. So I love that we're able to bring this last week. For those of you that were on and don't think I forgot, I owe you. I have the PDF. I wanted to correct some of the changes, but we have the PDF for the home buying consultation that I do to help explain to buyers all of the different perspectives and the goals that they can create through owner-occupied financing so that they can get into investing with low capital owner-occupied loans. So I went through the gist of my home buying consultation that every single buyer goes through when I help them. I don't care if they tell me they want to buy a single family home. I make sure they know all of their options, because I firmly believe that a dream home will always be in their dreams unless they create a path to it. And they can't make a decision about their goals if they don't know the extent of their options. No one can. You don't know what you don't know, and it's our responsibility as professionals, as agents, as we pursue knowledge in our career field, to explain their options to them. So I'm very passionate about that. And so I'm excited. So Patrick, teaching today, what what do you have in mind for?
Well, the first thing I thought we'd discuss is something that you just, or that we, I guess, brought up, and that is commercial versus residential, because I went from commercial to residential. And I know a lot of times residential agents think that they want to go to commercial because maybe there's more money there, it's more fun, you name it. Trust me, residential real estate is more fun than commercial. I'll say that. And I know more residential agents making 6 figures to 7 figures than commercial agents. You can make, don't think there's more money in commercial. There necessarily is not. You can make just as much, if not way more money in residential real estate if you do it right. But there's one major difference.
I'll ask Patrick.
That a lot of agents and most consumers and residential. And if you know that difference, you can really capitalize upon it and do a lot more transactions as an agent and make your clients a lot more money. So here's a big
difference.
Again,
Patrick, can you hear me? I missed you just like for a blurb, and I'm not sure if it was me or you on our network, on our connection. But you said right before you just said that last blurb, you said like the difference between, like, I missed the crux of what it was that you were saying.
Yeah, the difference between commercial and residential comes down to financing, the type of loan you can put on the property. Okay.
Right.
So
and I would say that from an industry perspective, the biggest thing when I would see people that wanted to cross over, I have a few people that really dance really nicely on both sides of commercial and residential, because in Anchorage, it's a small town. So like the circles are small and you can get away with that. But what I would say is, aside from the loan, from an industry perspective, it's your lead niche network, right? Like if you're pushing people that are going into commercial, you're looking for people that have capital or that have the network and team to invest capital. So now the type of person that you're looking for is not just your worker. You're looking for people that understand wealth building and are moving at least $150,000 a month for down payments. I mean, of capital for down payments. And that's like an entry level investor has liquid capital of about 150 grand. That's putting a commercial financing down on any type of entry level, multifamily or residential or otherwise.
Yeah, exactly. The commercial real estate loans, that's why you need a bigger loan, because the loans are completely different. They underwrite them a different way. You can't buy something 0% down. You can't buy it 3.5% down. Commercial real estate, we often think, is office buildings, industrial, and retail. But commercial real estate is also apartment buildings that are 5 units or greater. That's going to be brokered by commercial agents. As residential,
I've even had someone that we had a 4-plex, and because it was zoned, it was actually townhomes that were converted into a 4-plex, and then so it was converted legitimately through the muni, but because it was in a commercial area, my lender could not write a loan on it.
Yeah, so a 4-plex is residential real estate. A 5-plex and above is commercial real estate. Mm-hmm. Anything that is 4 units and below is residential. So single family home obviously is residential, but even a duplex, even a triplex, even a 4-plex is residential real estate. And the reason is you can put the same type of loan on a house, that you can put that loan on a duplex, a triplex, or a 4-plex. But you cannot put that loan on a 5-plex. And that's a differentiator. So if I want to buy an owner-occupied 4-plex all the way down to a single family, I can do it. But you cannot buy an owner-occupied 5-plex. The great thing about these residential loans, not only owner-occupied, but they're 30-year mortgages, fully amortized. So you pay them off over that 30-year period. Whereas with a commercial loan, they're typically going to be a 5, a 7, or a 10-year loan with a big balloon payment that you have to pay at the end of that loan, making them a little bit more risky than the residential loans that you can put on a 1 to 4 unit property. Mm-hmm. Now, your friend that had the 4-plex, why wouldn't they allow him to put a commercial loan on that?
It was the way it was zoned. No. They wouldn't allow it to be a residential loan, even though it was a 4-plex. the residential lenders, and we even tried a couple, they couldn't write a residential loan on that converted fourplex that was initially condos, was turned into a fourplex because it was 4 condos together that they did at the Muni. But then the residential lenders could not touch it because it was zoned, like the zoning was like commercial and then it was multifamily something. So even though it only had 4 units, the lenders could not write a loan on it because of the original zoning of that property.
Yeah, that must have been some unique zoning. Like maybe it was zoned 100% retail and it had a non-conforming use on it or something. Because
no, it was kind of in a mixed use area. You know, I didn't dig. We just moved on to another because it was an expensive property. We moved on. But I had 2 lenders tell me they couldn't write 2 residential lenders tell me they couldn't write the loan because of the way that it was zoned in the. Yeah.
Well, if anyone out there hits that issue again where you can't put a loan on 4 units and below, give me a call because I got a lender that'll put a loan on it even if the lot's zoned industrial. It doesn't, lenders will usually look less at what the lot is zoned as and more of what's the asset on the lot, because that's what they're insuring.
Well, and you know, you know, I've sold over 100 fourplexes in my market. Like I know, you know, we definitely know how to overcome lending issues, but there was something about the conversion of this building from the like condos to a fourplex that probably wasn't done correctly.
Yeah, there must have been something non-conforming done with that to not do it. Because I have a lot right now. I have a lot zoned mixed use commercial. It's zoned for 11 units. The first 40 feet of the lot has to be commercial. But all that sits on it right now is 2 houses, just 2 little homes, a duplex. So that got residential loaning. When I tear those down and I build up 11 units in a commercial building, then absolutely it'll need to get a commercial loan. Which again,
and you know, when you start to help people in this field, that you know that whether they're like doing the fourplex to commercial, you'll run into a lot more complicated questions regarding zoning and all that, you know, different types of things than maybe you would in a regular residential area. I had a client with a fourplex that was across from an 8plex, and then there was this big field, of course, out, you know, that was like. In Alaska, we have a lot of marshland, so there was like this green belt, but they were going to use the easements between the buildings to build like, you know, I don't know, a 30 unit plus or 50 unit plus apartment complex on this green belt. So everybody is like fighting with the city about not letting them, you know, change the zoning. So you have to, you know, people pay more attention to the zoning laws when they're in that multifamily space, because all of a sudden, like you said, you know, you're going to put an 11 unit something, and you know, I mean, if it's already zoned for it, great. And then, but if it's not, you know, people could try to petition the city to not let the zoning change.
Yeah, absolutely. So the main difference between residential and commercial just comes down to that loan and the type of loan you can put on it. Now, what I have found is most commercial agents will try to stay away from 2 to 4 units, unless, like you said, Vanessa, maybe you're in a small town with 10,000 or less people, then you'll see agents doing both product types. But in a large, you typically, if you're a residential agent, you stay in your residential wheelhouse. And if you're commercial, you stay in that wheelhouse. But when it comes to 2 to 4 units, most commercial agents won't touch them, because the contracts, the paperwork is different than the paperwork that they're familiar with on commercial. Commissions are usually a little bit smaller. The lending is different. But on the other side, a lot of residential agents, they'd love to get a duplex or a triplex or a fourplex as a listing, but most don't know what they're doing when they get those. Unless you've watched some of our past webinars that cover how to value the 2 to 4 units based off of the income approach, the rents that are coming in. So as an example, I wanted to share on the screen an example of a deal that we bought, and we took advantage of a realtor that didn't know how to properly value this property because they didn't calculate the cap rate and whatnot correctly. So as buyers, we came in and just picked it up. Would you mind if I share that one right now?
Absolutely.
So this property, which you can see on my screen right now, you can see the screen, right, Vanessa?
Yep.
So this is a duplex in San Diego, and it was listed at $699 to $749. We would have paid over $800,000 all day for this property, over 800. So this seller hired an agent that just didn't know how to properly value, underwrite, or appraise what they're selling. Because let's face it, as realtors, we need to know how to appraise property. We're not appraisers, but we need to know how to value it if we're going to sell it. But this seller here made a major mistake, and the mistake is not on top where you see the address, the APN, number of buildings, number of units, etc. The mistake is down here on the bottom. And you see on the bottom in the financials where they have the gross rent multiplier, the cap rates, the income projected, the income actual. There's a lot of blanks down here. They just simply didn't fill it out. They didn't do their homework to calculate the value of the property. But most importantly, they didn't properly research what the rents are in that market. And they put down projected rents of $19.50 a unit. My team and I, we went out, we did the research, we looked at what the rents would be in that market, and we came to the conclusion that this building, each unit, is going to rent for at least $2,500 a month. 3-bed, 1-bath units, completely remodeled in Linda Vista, a pretty nice neighborhood in San Diego. We knew that it would rent for $2,500 a month. So it's this area down here that as a residential agent, if you want to get into 2 to 4s, you need to understand the financials. And that's why we spent so many webinars teaching those financials. And if you're working with a buyer, you can go out and find deals like this, in which maybe an agent misrepresented the value of the property, the rents. And if you're going to represent the seller, you want to ensure that you're properly valuing the property and researching the correct rents on that asset. Down here, we show you how to calculate what those cap rates, what the rents are. Again, we've gone through cap rate before. You simply take the value of the rents coming in times 12 to get your gross rent, $9,000 a year in this example. You deduct all of your expenses to get your net operating income, and you divide it by purchase price, and that'll give you the cap rate. Any questions or comments on that, Vanessa?
Nope.
So it's extremely important as a residential agent working on the 2 to 4 units that you know how to calculate these cap rates so that you're properly advertising when you're a listing agent or searching for the right property when you are the buyer's agent. The other thing we can share is zoning. You mentioned zoning quite a bit, Vanessa. And I've learned that unfortunately in a lot of markets, folks are misrepresenting the zoning of their property. What's zoning like in your market, Vanessa? Where do you find the zoning?
It's very, what do you mean what it's like? Ours is very hodgepodge, so you do have to be pay very close attention. We don't have communities that are, like super segregated. Everything is mixed up from one neighborhood to another. You'll have a higher end home next to a trailer park. So it's very difficult to distinguish zoning in Anchorage and really in Alaska because of the way that the city was built. So it was like, built out in layers. So, there was like a decade and a half, and then, the outskirts were the lower income, and then a decade and a half, and the outskirts were lower income. So it just kept growing out that way, right?
Yeah, and zoning is always changing in every city. I know a lot of realtors and clients will look at a title report or a tax record, and they'll see something similar to what you're looking at right now. This is a little case study that I put together on zoning, and you see in the bottom right, it says zoning, R3, restricted multiple. So a lot of folks might think, well, R3, that means you can have 3 units, right? No, it doesn't. If you see something that says R1, R2, R3, R4, it doesn't necessarily mean that's how many units you can have. It depends on the zoning code for your municipality. In San Diego, our zoning code completely changed in the 1970s, but it never made it to the title reports. So every single title report, property report And even the tax records in San Diego do not reflect the current day zoning. Because again, the zoning was updated, but never made it to those reports. Now in your market, maybe R1 does mean one home. Maybe R2 does mean two homes. Maybe R3 means a triplex, but you need to find that out. What are the zoning nomenclatures in your city? Now, this is a listing that we sold last year, and the client came to us and they said, can you help us sell our property? We think it's zoned for 3 units, but we've got 4 units on it. Here you see the front unit, which is a rather old house, but there are four units on this one lot. And we asked the client, what makes you think that you can have 3 units? And they said, well, the agent that helped us buy it saw this R3, and they told us it's zoned for 3 units. But again, in San Diego, R3 doesn't mean 3 units. So we showed that client a map of the San Diego zoning code. In your city, you probably have something similar to what we're looking at right now. This is just a map of a neighborhood in San Diego. And every neighborhood in San Diego is going to be color coded like this with different colors and different zoning codes. You see I circled RM-3-9. Right above that is RM-4-10. And right below it in this orange is CC-3-9. I like this map because it points out that on this one city block, we have 2 different zoning codes. So zoning isn't necessarily going to be block to block or neighborhood to neighborhood. It could be specific lot to specific lot. And you can have 2 lots right next to each other, as in this case, with 2 different zoning. And in San Diego, RM means residential multifamily, meaning no commercial can be built on it, just residential multifamily. Whereas the CC means mixed use commercial. You can have some commercial assets, you can have some residential assets, specific ways you got to build them, but that's mixed use commercial side by side. Now you see here it's RM-4-10, and then right below it, RM-3-9. What does that mean? Well, that is going to indicate how many units can you build based on the square footage of the lot. Your city is probably going to have similarly complicated zoning. So it's not just going to be R1, R2, R3, R4. If you're lucky, it might be, but it's probably going to be something like what we're looking at here. And let's take a look up here in the top left. You see RS-1-7. That's residential single family. And again, the 1-7 indicates how large that lot has to be for the home that's sitting on it. So if your city is similar, you would probably go to the zoning map, find the parcel that you're selling or buying, find this code, and then you have to decipher, what does that code mean? In your city, it's probably going to be similar to the city of San Diego. You're going to have a municipal code. In San Diego, so it's the San Diego Municipal Code, Chapter 13, which discusses all of our zones. And take a look at this page. You can see many, like probably about, 9 different zones on this one page. And this chapter goes on and on and on. This is just a residential multifamily zoning. Then you have the commercial zoning, then you have the single family zoning. But you can see that each different zoning nomenclature gives you the density allowed per lot size. RM-1-1 gives you 1 unit for every 3,000 square feet a lot. RM-1-2 gives you 1 dwelling unit for every 2,500, and so on and so forth. And as you can see, as you go down this, we get more and more dense, all the way down to RM-3-9. The subject property we're looking at right now allows 1 dwelling unit for every 600 square feet of lot area, which is one of the densest zoning allowable lots that we have in San Diego. So if you haven't researched this type of thing yet for your market and you're working with investors or in investment real estate, I highly recommend digging into the zoning for your city, your town, and gaining a full understanding of what can be built and what can't be built on each lot, beyond just R1, R2, R3, R4. Yours is probably going to look similar to this. Now, here you can see blown up, RM-3-9 is the lot we're looking at right now. And this lot had a lot size of just over 4,000 square feet. So again, the zoning is not what the title showed, R3. It's RM-3-9. And with a 4,000 square foot lot, allowed over 600 for one unit for every 600 square feet. We can build up to 6.68 units. You obviously can't build 0.68 units. So in this case, we get to round up anything that ends in 0.5 or greater. We round up and we're allowed to build 7 units in this case. So that's how we advertise this property when we sold it. And if you're going to be a realtor that's working with investors and working with multifamily lots, you need to be able to research and understand the zoning so that when you list the property for sale, you're not talking about the nice kitchen or the nice back bedroom or the big backyard that the kids can play in. Investors don't care about that. Investors want to see an ad that looks more like this: development potential, RM-3-9 zoning, allows up to 7 units. When this client bought this property nearly 10 years ago, the ad did not mention any of this because that agent at the time had not realized the lot could accommodate up to 7 units. And the seller, our client at the time, came to us and said, no wonder we got so many lowball off-market offers, because there were a lot of developers, a lot of sharks that were trying to give them off-market offers to buy it cheap because the client didn't know it was zoned for 7 units. So our job as realtors, though, to make sure we inform our clients of what that lot was truly worth. Vanessa, anything you want to add onto that with zoning?
No, but it's just that this is a great insight for why it's important to take the time. You know, it's like when you're doing residential real estate, sometimes it's so easy to just be like, well, whatever. Like people are just going to buy their home and live in their home, and but even though some people, few people, go out of their way to really learn, and let's face it, I always tell people, real estate is hard whether you're great at it or whether you're not good at it. Because if you're great at it, you're busy as can be, and if you're not good at it, you're like just trying to figure out lead gen. So taking the time to get this knowledge in your market, these are like not even focused CEUs that maybe your MLS focuses on even hosting, or your local real estate school focuses on hosting, because a lot of these concepts and principles, when it comes to the investment principles, or even just that more in-depth knowledge, is stuff that really, in order for you to be set apart, you have to take it upon yourself. So getting into your zoning, even though, like, let's be real, this is not exciting stuff to learn, is, how do you make yourself the expert? How do you make yourself the most knowledgeable? And then heck, teach it in your market center, teach it in your market, so that you can, recontribute. But yeah, I mean, this is stuff that a lot of residential real estate agents kind of gloss over and look over when they're just, used to buying and selling residential. And when you start to look at investment potential, you really want to take the time to just to dig in and to learn about the lay of the land. So as you guys might already know, I'm an intelligence analyst and in a rescue squadron, and I'm in the Air Force. So a lot of times people will associate our service branch and our careers as air centric or focused on aircraft, but I'm in a rescue unit, so we're actually focused on the ground. And when I deploy to Afghanistan, when I deployed to a combat zone, I have a 30 nautical mile radius that I have to become the expert on. And that's why taking that time to really say, okay, let me learn the lay of the land, let me understand the zoning, let me know my neighborhoods. And can you imagine how much better of a realtor, even if you took a 10 or 20 mile radius and you said, let me learn the map, let me learn the zoning, let me see where the opportunities are so that I can help guide people. And then once you kind of study it and just make it, an hour to 2 hours a week of looking at it, reviewing it, reading it, looking at definitions, or just, emailing your city or asking the terms, then you can get more and more versed over time. This doesn't happen overnight.
Yeah, and I saw the question come in: how do you find out the zoning? How do you research it? How do you look it up? For all of you out there, you might have seen what I just did. I went on Google and I typed in San Diego zoning. whatever city you live in, whatever town you live in, just jump on Google, type in the name of your town, followed by the word zoning. And most likely, the first link you see, as we see on my screen here, San Diego zoning, first link is our zoning development services. Every city in America, unless it's a really, really small village, is probably going to have what you see in front of you right now. Not 76-degree weather. That's just San Diego, and you see that on the top here. But you're going to see a zoning website where you can look up every single parcel of land in your town, in your city. You can also find different codes and regulations. So as a realtor, as Vanessa said, this might be kind of dry. It might be kind of boring stuff to research your zoning. But here's how I like to think about it. Is making money boring? Absolutely not. And if you understand the zoning, you're going to make more money because you're going to get more clients are going to refer you. And when you buy your own deals, because as a realtor, you should eventually be investing in your own properties, you're going to make a lot more money because you understand zoning. I bought a property last year, 2019, and it had 2 units on it, that duplex that we were just talking about, Vanessa, and the lot had 2 duplexes on it. The seller and the seller's agent thought it was zoned for 7 units, but it was actually zoned for 11 units and retail space. That's why I bought it, but they hadn't done the research. So if you can do this research, guys, pretty simple. Just Google search your town.
And think about it, like seriously, when was the last time your code enforcement officer was asked to lunch? Like, if you don't want to do your homework, like, I don't want to go read the manual. I'm like, hi, code enforcement. I used to work in the city engineer's office when I was 19. So can you imagine if you tell your code enforcement officer, like, hey, I'll bring lunch. Can I come sit in and you teach me about the process, about how to change the code or put, file, put, like, if you want to learn the city, whatever, like, go, like, deliver lunch to the city. No one's going to tell you no, and they'll sit during their lunch break and explain their career or bring them into your brokerage and ask them to teach about it. Like, when was the last time anyone showed any interest in learning about what they do for a living, right? Like, if it's hard for you to do the research, go do what's natural to you. Go, host them, go take them lunch, go ask them for information, go tell them to teach you the process, to show you the zoning. They'll even give you a history lesson about why things are the way they do. They are in your specific town, like in Alaska, like all of the weird historical things with the pipeline and why we're zoned the way we're zoned, so every city has that like historical perspective of zoning, and all of that, like, it's that random trivia knowledge that you're like, why do I know this stuff? You never know when you're gonna all of a sudden have something under contract or have to save a really squirrely situation or find an opportunity for someone to get more money for their property, or a buyer that can, potentially have a better investment opportunity because you have this knowledge or the code enforcement officer's number in your back pocket, right? So just saying, build relationships there also.
Yeah, and you probably saw on the previous screen that I was on that you can look up, you can even find lots that are primed for zoning development. So here I am on the San Diego zoning map, and they've updated this multiple times in the last few years, because I started becoming a zoning nerd probably like 3 years ago. And
when you started to dig for deals, right? I'm going to ask you why. Because when deals aren't obvious on the MLS, then you have to go do Intel analyst research and find the opportunities.
Yeah. Like, here is that section that I just showed you on a PDF. As I said, this map used to simply be PDF. San Diego's really updated their game, and now it's an interactive map that I can just scroll around and look at various zoning throughout the city of San Diego. And here I just put in an address, 1018 Bangor Street. I know this is a single family home, RS-1-7. Click on more info, and it'll drill down into these various chapters where you can look up that exact zoning. So RS-1-7. But look at all these zonings, guys. Like, I don't memorize how many square feet each lot needs to be, because there's literally dozens of zoning. And this is just our RSs. Here's our RMs down at RS-1-7. This is probably going to take me now to a PDF of that San Diego Municipal Code, our zoning. So what I'm showing you
And like
guys
my
right now,
city,
and
and like
go
my
on.
city, like we have another thing. So if your city isn't like super versed like this, we have another thing in Alaska called Anchorage Live Map. And it's not even a municipal like related document that has, it's all tied to the tax assessor's office. And you can go like, you know, parcel by parcel, and it has all sorts of other information. Or for a lot of you guys that have some of these softwares built into your MLS, if your municipality doesn't have this thorough of a web published type of you know, repository, because like Alaska or Anchorage being a smaller town, I mean, I could find this library if I go down to the city, but there isn't like a website like this where I could download all the random you know, they just don't have the funding to pay the people to like upload all this web data, right? So in my town, we don't have what he's showing you they have in San Diego. But so if you have, you know, a town where it's lower, you know, just lower funding, or a smaller town, you want to look at other resources. You know, in Anchorage, it's anchoragelive.com, and it's parcel by parcel. I can pull up zoning, and they have a zoning map there. But like, this is really great what he's showing you that San Diego has.
Yeah, and besides how many units you can build on a lot, the other thing that you'll often want to drill into, maybe your client wants to know or you want to know, is all this other data that you see on the left. So RS, these are all single family lots, and you can see how many dwelling units are allowed per lot. Obviously one. In San Diego, RS is single family. What's the minimum size of that lot, square feet? And then what are your setbacks? What are your dimensions? These are going to give you all of your minimum requirements for setbacks, for your lot width, your lot depth. One of the big numbers though, well, before I get to the big number, let's talk about height. It's also going to give you the height of your structure. Can you build up 2 stories? Can you build up 3 stories? You're at 35 feet high, you can probably build up to a 3-story home. But this number down here is one that confuses a lot of people. It's called your max floor area ratio. Floor area ratio is often abbreviated in real estate, especially investment and development real estate, is FAR. We don't call it FAR, we call it FAR, floor area ratio. What is that? It's the ratio of floor area that you're allowed in your building relative to the ratio of the lot size, okay? So let's do a quick calculation. You see the floor area ratio for most of these lots is 0.6. So what does that mean? Well, on this lot, that's 5,000 square feet on the top right, I can have a building that has a floor area equivalent to 0.6 of 5,000. The ratio, it's the ratio of the building square footage relative to the lot square footage. So if I got a 5,000 square foot lot times 0.6, I can have a house that has 3,000 square feet. The moment I make that house 3,001 square feet, maybe I want to add a bathroom, I'm out of regulation. You can't do it. What if your lot is 5,500 square feet? That's how big your lot is. Take it times the floor area ratio of 0.6. You can build a 3,300 square foot home. Now on these bigger lots, you've got a lot that's 10,000 square feet, as you see here in the center, and maybe it's a little bit more. Maybe it's a 10,100 square foot lot times 0.6. That's how big of a house you can build, a 6,060 square foot home. This is important to know if you've got a speculative buyer that maybe wants to buy a lot, tear down the house, or add on to the house. The FAR, floor to area ratio, will let you know how much you can add on. And this is even good for you as a homeowner that maybe isn't investing, but you just want to add on to your house. You want to add on a 4th bedroom or something. You need to know the zoning of your house and the floor area ratio for it. Going back to the San Diego website, and I know a lot of you probably don't live in San Diego, and your city's website might look slightly different, maybe not as robust, but a lot of times on these development service websites, as I mentioned on the right, you can even find potential locations for your project. So maybe there's someone who wants to build you name it, a multifamily property or a commercial retail property, you can actually search through the website and find lots that would accommodate what you want to build. It's a great area to research. Again, it might be a little dry, but just think at the end of the day, all this research is going to lead to you being a better agent, and you being a better agent is going to help you and your business ultimately make more money. And that's
And that's one of the things that I was just explaining to someone who was interested in real estate. When we look at the income potential of a physician, even an entry level physician, you're looking at $250,000 average income for an education that takes them 8 years, and that is about $400,000 minimum of investment. When you look at real estate, that so many people could get into this industry for literally less than $2,000, who can jump in and make it whatever they want with very little investment of time of actual study, research, learning, finance. I mean, it's a bit scary to think that we're in this financial industry and that there is really no X level of expectation of thorough study, education, knowledge set, or anything. So when you do these extra above and beyond things, this is one of the things that Patrick and I are highly, highly passionate about, and why we're even on this webinar, is to really raise the threshold of our colleagues to learn the stuff that no one else is making you learn, so that you can be better for your clients, for yourself, for your profession. And then, also like us, get passionate about educating other realtors, it's great.
Yeah, absolutely. So tying it back to the story, we were able to help our client make hundreds of thousands more because we advertised the zoning correctly. And as I mentioned on the deal I bought last year, I was able to buy something where the seller and their agent thought it was zoned for 7 units, when in actuality, it was zoned for many, many more units. Another case, in Vanessa, you'll know this one. This is Brad. I helped Brad sell a duplex down here in San Diego. His lot had 2 units on it, as you see right here, but the lot was zoned for 3 units. Now on this transaction,
that's his duplex, the one he just sold.
Yeah. And this one is in North Park, a great neighborhood, but it had already gone through a lot of gentrification. So I was talking with Brad, and he's like, "Hey, let's think about selling this. If we can find
he wanted better performance, right?
Wanted better performance, wanted to do a 1031. These 2 units, again, it was zoned for 3. We were able to sell it to someone who's considering putting another unit in the backyard, adding on. But Brad was getting around $5,000 a month in rent on this duplex. He bought it years ago. And again, I always emphasize investing in markets that have higher than average rates of appreciation, San Diego being one of those. So he made about a $250,000 net gain after holding on to this property for about 5 years or so. And instead of paying taxes on that gain, he decided to do a 1031 exchange, which we talked about how to do on one of our previous webinars. And with that 1031 exchange, he rolled his money into a 4-plex. So he doubled the number of units. And as you see below, the 4-plex he bought cost him only $30,000 more than the duplex he sold. And it's much closer to the beach. How do we get such a good deal? Because that's our job, to scour the market and find good deals. And we found this amazing one in a gentrifying neighborhood that has a lot of economic and population growth occurring right now relative to where he sold. And he was able to double his units and increase his rents by nearly 33%, paying only $30,000 more. He also bought this property with no money down. People are always saying, "Hey, how do you do creative financing? How do you buy a property with no money down?" The 1031 exchange is one of the best ways. He bought the duplex on top with no money down because he bought the duplex with his VA loan. He owner occupied it. Then he moved away. The property went up in value $250,000, and he rolled that into a $1.05 million purchase, no money down, because he's just rolling money from one property to the next. And now he owns a 4-plex near the beach in San Diego, and he's never had to put in any cash of his own money. And Vanessa, you're always talking about the VA loan quite a bit because you work with a lot of veterans. And you've probably seen veterans do the same thing, buy something, no money down, and maybe years later be able to sell it and buy something even bigger, just rolling their proceeds from the first sale into the second.
Right. Mm-hmm.
So that no money down can just roll on and roll on and roll on. I own in San Diego, excuse me, I own 7 properties, and I've probably never put down any more than maybe $100,000 throughout my lifetime of owning those 7 properties, because I just keep on doing cash out refis. In fact, right now I'm in the market to go buy another property, and I'm doing no money down. Yet I'm putting down quite a bit of money, but I pulled that money on a cash out refi out of other properties, and I'm using that as a down payment on my next property. So my hard-earned dollars, they just stay in the bank. I don't need those to buy real estate.
And that's what, whenever I'm teaching people entry level how to invest, is you want this to become a machine that it doesn't take the food off your table, that it doesn't affect the money that you feed your kids with, you know, that it becomes such that it becomes a machine that it feeds itself, it grows itself, it leverages itself, it pays for itself if you do this right.
Exactly. And I think this case study, Vanessa, with Brad kind of ties together everything that we've taught over like the last half dozen or so classes, closing it out with this class of zoning. We were able to sell his property for top dollar and advertise it as a zoning opportunity. You can build a 3rd unit if you want. Someone came in and spent a little over $1 million to get $5,000 in rent. And then we knew how to understand and underwrite the cap rate, the gross rent multiplier, what rent should be on units, to buy for almost the same amount of money a property that's going to pay him nearly $2,000 more a month in rent.
That's awesome.
And this $6,800 is the current rent. We did a market study on it.
I mean, you can totally just improve that curb appeal with like the little, I mean, just the curb appeal alone, forget what you're going to do, you know, to everything else, and improve, you know, the rents.
Exactly. So, and on your note, Brad's doing exactly what you just said. He's doing a minor renovation, and he's going to be able to bump the rents up of each unit to around $1,800 to $2,000 a unit. So soon he'll be getting between $7,000 to $8,000 per month in rent, having sold the property for the same value, almost only getting $5,000. And this is how you work with clients. This is how you help clients. You understand zoning, you understand the financials, and you understand how do you do things like 1031? How do you use a VA loan to buy 0 down? And it makes your clients millionaires. That's our job. I see a question came in as well. How do I start that machine? This is my first webinar. I just found you guys. What else do I listen to? For all of you that maybe this is your first or second webinar, Vanessa, I think we have these all recorded, right? They can watch.
Yeah, and they're all on YouTube. If you just search investment series on Facebook on the LCA page, you should see a lot of them. We are going to probably, the plan is we'll probably, Patrick will go to like once a month for a little bit just to touch on like market updates and stuff. And then when he teaches the 2-hour class, which will probably be this winter, then we're going to restart the same kind of series and theme. So we really appreciate like everyone, because as we have fleshed out a lot of the knowledge set that's just like organically in our head. Yeah, Susan says, listen to them all. You know, we've kind of delivered what is on our head, but now it's kind of cool because we can go back to our videos, create a framework with the way we've unpacked the process. And so you guys have kind of been our first like following of people where we kind of go back and forth on talking about different perspectives in this space. And we'll probably come back and revisit talking about similar topics and just adding more experience to it. What do you think, Patrick?
Yeah, no, I think that's a good idea because we started out with really just the very, very basics of real estate financials. How do you calculate income, cap rate, gross rent multiplier? How do you value a property based on the financials? Then we rolled it into how do you grow your portfolio? How do you do a 1031 exchange? We talked about the tax advantages of cash flow versus appreciation. We talked about ordinary income tax rates, which is cash flow, versus long-term capital gains tax rates. And then we kind of tied it together with all the zoning. And now we're showing you a case study, you know, how that all comes together.
And
So
in
yeah.
between there, we've gone over real estate strategy from low income owner occupied loan, what I like to call owner occupied loan stacking. But I did a lot of my, because I teach people how to get in from nothing to into something, you know, so those classes.
Yeah, and the owner occupied loan is one of the easiest and best ways to start out. The owner occupied loan you mentioned, Vanessa, I think that's one of the best ways to start out for any new investor.
Oh, Jake said I'm frozen. We just had a little power surge. So I'm gonna get off my Wi-Fi in case that happens again. Our wind is crazy right now. But no, so last week I taught my basic home buying consultation, which I literally jump into investments for every single buyer, and I teach them how every buyer is an investor, and when you look at your client, you say, unless you plan to lose money when you buy a property, and they're like, no, you know, and then you're like, okay, well, let me teach you something, you know. So you know, also in that I taught the owner occupied loan strategies, home buying consultation, and stuff. So all that's kind of packaged in the last like 8 videos that we've done. Or
yeah,
more.
and then just to kind of close it out, I think if you don't mind, I'll go over a couple of potential tax changes that might be coming down the pipeline that could affect real estate investors. The first one, and this really depends on things in Congress and how Congress might change the tax code, but we all know it recently came out that Donald Trump, I think, has paid $750 a year in taxes for the last couple of years, and there's many, many more years in which he paid nothing in taxes. And that's no surprise to me, and it should be no surprise to most real estate investors, because real estate is one of the best tax avoidance investments that there is in the nation. And if you are a realtor, the tax advantages of investment real estate are even greater because you can write off your passive losses, which are not real losses. It's just depreciation. And again, we did a webinar on just taxes. So if you're wondering what depreciation is, watch that webinar. But if you're a realtor or anyone that works in real estate, you can take passive, non-real losses like depreciation and write those off against your active income so that you minimize how much you get taxed, if not wipe it all together, as Donald Trump did. Now, because of that revelation and now the rest of the world, the cat's out of the bag, real estate's a great tax advantage investment. It's better than a 401k. You don't even have to pay taxes half the time if you own real estate. Cat's out of the bag. So now Congress is probably going to take a stronger look at all these loopholes we have as real estate investors. So a couple of them might be on the chopping block in the next couple of years, and I just want to point those out. The first one is, how are real estate investors taxed? Well, normal Americans that don't invest in real estate, middle class America, pays these tax rates up here circled in red. Those are ordinary income tax rates. So if you make your money through a job, you're probably paying 24 to 30% of that money to Uncle Sam. And again, that's how most Americans pay taxes. Real estate investors don't pay taxes that way. Now, on cash flow that you make in real estate, yes, you'll pay cash flow, income, ordinary income taxes up here at the top. But for real estate investors that invest for appreciation, which a lot of real estate investors do and real estate developers do, they invest for the appreciation, not the cash flow, they pay tax rates down here in the bottom. And these tax rates, the highest rate is 20%. You can make millions and millions and millions of dollars and still only pay 20% taxes. You can make almost $500,000 and only pay 15%. So the tax code, let's not kid ourselves, it is written for the rich. Anyone who thinks the tax code is written for the middle class has not read the tax code. It's written for the wealthy, and it's written for those people that don't make their money through work, but instead make their money through investment. Clients I work with that are high net worth individuals, they got their high net worth not through work. but through investment, which is one of the reasons I preach real estate investment so much. Now, not only is real estate and the growth of it going to be taxed in these lower tax brackets compared to a job or compared to other investments, but you can avoid taxes altogether. And real estate is the only asset in which you can avoid taxes altogether through a 1031 exchange. This is another thing that's probably going to be looked at very strongly in the next couple of years. I hope it doesn't go away. It might. So it's something I think worth noting. And a 1031 exchange, we mentioned one just a few minutes ago. Our friend Brad did it, going from a duplex where he made 250K and he bought a fourplex. Another example is before you. You could buy a single family home for 500K, goes up in value over the next 10 years. You sell it, you make a few $100,000, and you roll all of your gains into a duplex. That's worth $1 million. It goes up in value. You sell it 10 years later, and you buy a triplex for 1.5. And years go by, goes up in value. You get the story. You keep on trading up. That's why we call it a 1031 exchange. You're exchanging one property, and the sale of it, the proceeds you gain, you exchange, roll into a property of equal or greater value. As long as you keep on putting your proceeds into a property of equal or greater value, you don't pay any taxes at all on it. If you put the money in your pocket, then you would pay these low capital gains tax rates, which at least is lower than ordinary income tax rates. But if you don't put the money in your pocket, you simply don't pay any taxes at all. And you might be thinking, well, the government's not stupid. You're eventually going to have to pay taxes on it, right? And the answer is no. No, as long as you do what most investors do, you'll never pay taxes on it. You'll get something called a step-up cost basis. So what do most investors do? They 1031 to the day they die. And if they want to get to a point, say you turn 80 and you don't want to own real estate, at least not a property that you solely own anymore, you can even 1031 exchange out of this real estate and invest into a real estate fund, if you will, called the Delaware Statutory Trust, which is a lot of high net worth investors putting their money into one building. That way you don't have to bother with tenants or leasing a property out or anything. But nonetheless, with real estate, you keep 1031ing up to the day you die. Then when you die, your property or your DST gets what's called a step-up cost basis, and you can leave the final property, the final amount to your kids, to your heirs, whoever it might be, and they can sell it at that full value of 2.5 million and not pay any taxes on it, because the IRS pretends that the individual who inherited it paid 2.5 million. Thus, if they sell it for 2.5 million, they don't pay any taxes. The tax code has a lot of pretend make-believe stuff in it, like this step-up cost basis, things like depreciation, pretending a property is losing value even though it's not, to get tons of tax write-offs if you're a real estate investor. These are all things I'm going to keep an eye on because I think Congress is going to look at them very strongly after it's come to the public's eye that real estate investors really don't pay much, if anything, in taxes. Before we close it out, anything you want to add to that, Vanessa?
The thing that you mentioned last week about when you die, that we can, how our inheritance is tax-free, that when you do pass on, when you are, creating this wealth, in other videos we talked about trust funds and other things for us to be able to, because obviously accumulating wealth is one thing, using wealth and being able to leave it for causes that are important to us, or the legacies that we want to leave, or the opportunities we have to help people through, even these cash out refis. Number one, historically, American real estate continues to rise over the trends of our entire founding of our country. And number two, when you do die, the tax benefits that our heirs will have to not pay taxes on the sale of our assets is something to take advantage of also. Mm-hmm.
Yeah, so we'll keep an eye on the tax laws, and depending on what happens next year, we'll maybe even do a specific tax presentation again, just like we did earlier this year.
Oh, that'd be awesome. Absolutely. And when Patrick, I've not been having my head in the political game. When are those tax laws coming?
Oh, they're not necessarily coming. They're not necessarily coming. It depends who wins. If the Democrats win, then both the White House and Congress, then I would speculate we'll probably see some of those changes. If the Republican win, then we probably won't. I mean, let me be clear, and I don't think it's any surprise, but Republicans definitely make the rich richer, and Democrats are focused on helping out the poor. And we saw that in Trump's tax law. I can tell you as a real estate investor myself that works with I work with high net worth individuals and I work with middle class America. And the Trump tax law has helped high net worth families and high net worth individuals extremely. Most high net worth individuals and families that invest in real estate pay very little to no taxes. The story of Donald Trump not paying any taxes, there's a million stories like that. Usually the higher net worth you are and the more you invest, the less you pay in taxes. Whereas middle class America, very small tax breaks.
And basically what they're saying is if your industry or your investment creates jobs or housing for other people, right, that they're going to give you a tax incentive. So as a professional in the real estate space, you even have advantages and like that no other industry has from a tax perspective, that you can leverage and take advantage of. But basically that's the way the law is set up. When you are creating housing for other families and other human beings by using your leveraged financials, then you get a tax break. And that's kind of the way it's written. So I know so many people in the multifamily, commercial multifamily space. And when I first started jumping into the multifamily, commercial multifamily, because I've been in residential multifamily now for 7 years, but since I've been selling real estate really, but when I jumped into commercial multifamily real estate, and I learned that all of my now new peers or colleagues that were not, none of them are realtors. It's so crazy when you're in the commercial multifamily investor resident like space, there's almost no realtors. They're all investors buying off market stuff. And I'm like, where's the realtors? Why aren't the realtors in the room? I mean, there was like 4 of us in a room of like 500 and it was so crazy. Those, almost none of them like have a tax liability. They don't pay taxes because they leverage all the cost depreciation off of, but that's not true. It's not so that regular Americans can't do it. So, and I'll say that, they are, but what I was saying was that they don't pay taxes because their multifamily assets offset their tax liability. So they don't pay taxes. And then it's not that they don't have to, but I've had people that for 6 years, and I'm looking at them like, gosh, if real estate agents knew this, that we pay like a third of our income to taxes, every year, we're like so pained by it. If we had some real estate investments that could offset our tax liability, like you have no idea how much more you can do with your income and your finances, right? Especially if you're a good one. But to Yvonne's point, this is not so the regular American can't do it. The problem is that regular Americans don't have this knowledge, and that's your job. Is to educate them, because we're the ones that are working with regular Americans. We're the ones working with the blue collar W-2 family. We're the ones that are teaching them real estate investment principles. It's your job as a real estate professional, and that's why I'm here right now. So I really want to charge you with this knowledge to say regular Americans can do it. The government has set up for a 3.5% down for a civilian and a 0% down for a veteran who has served in the military to get into real estate investment with almost no dollars down if they have the correct strategy, and it's your job to learn it.
Absolutely. Yeah, I mean, regular Americans can absolutely do it. I was born into lower middle class, and we lost my home when I was a kid. And now I own 7 properties in San Diego. So you can go from any class to any other class in America, but you got to get the knowledge. And it's getting the education and the knowledge that got me from where I was to where I am. And you guys got to go out there and share that knowledge.
Yeah, and and not to get political, because it's not about like that political like swing of, there's always a need in the country. Sometimes the need in the country is to support policies that help the lower class. Sometimes the need in the country is to build up the wealthier for whatever reason, right? No one is saying that either path is wrong. Sometimes one segment of the population gets the advantage, and other seasons, the other segment of the population gets advantage. I mean, Patrick and I are both service members, and I'm an intelligence analyst who gives like geopolitical advice to my commanders, right, and decision makers. And what I'll say very honestly is that there isn't, necessarily the same decision isn't always right at a different point in time. There's always different seasons. And so depending on the needs of our country and depending on what we have going on, the point is from a real estate perspective, is that when the laws are changing, when to take advantage of them, when to make them work for you, and you have the knowledge set so you can help your clients. So regardless of what season or what politicians or like, that's irrelevant. Like, it's about like knowing the policies, knowing how to use them for your advantage, and teaching your clients how to do the same.
Yep, absolutely. Cool. Well, with that, I think we're a little bit past 10. So we'll sign off, and we'll see you all next time.
Yay. Bye, guys.
Bye, guys.